In today's video, I'm going to share with you a straightforward breakout trading strategy that can help you capitalize on significant price movements. Make sure to click the subscribe button and to hit the notifications bell so that you know exactly when we release new content. What is a breakout? A breakout occurs when an asset's price moves beyond a critical support or resistance level, often leading to substantial price movements. Let me illustrate this with an example. Here on this chart, you can observe the price moving within a defined range. We can identify a resistance level above and a support level below, as the price has bounced off these levels multiple times. Notice that once the price broke through this key level, the market started trending upwards, making it an ideal buy entry point. How to identify potential breakouts. Now, how do we identify setups where the market is likely to break out? One effective method is to look for breakout patterns. Many of you are probably familiar with patterns like rectangles, pennants, wedges, and triangles. However, a common mistake traders make is expecting the market to replicate these patterns precisely as they appear in textbooks. For example, when looking for a wedge pattern, they try to find candles that match the drawing exactly. If you do this, you'll likely never spot a single pattern because, in reality, prices don't move in perfect formations. Key to success: focus on key levels. Instead, the key is to focus on identifying critical levels. Let me show you how. Now, as we examine the top of the chart, we notice the price forming lower highs, allowing us to draw a downward trend line above these points due to multiple rejections. Next, looking at the bottom of the chart, we see additional rejections, prompting us to draw a support line below. Here I have drawn now the downtrend lines, and here I draw now the support and resistance lines in the chart. Now here I make the first example trade. You can see I have drawn a trend line. The trend goes down, and I draw support lines in the chart where are a very powerful idea in all trading decisions. Now you can see the chart breaks the downtrend. Then after he breaks the support line. And this is now a very strong breakout. Now we make our buy trade. You can clearly see it was a perfect trade. When you identify a support and resistance level, it's a rectangle pattern. When you see two converging trend lines, it's a pennant. When you notice two trend lines moving in the same direction, it's a flag pattern. By understanding this core concept, you don't need to memorize pattern names. Whether it's a triangle, wedge, or rectangle, the principle is the same. Price consolidates, key levels form, price breaks out. As long as you can identify these key levels, this strategy remains effective. Predicting breakout direction. Once you've identified the consolidation pattern, the next step is to predict the breakout direction. Will the breakout occur to the upside or the downside? A frequent mistake traders make is jumping into a position at the first sign of a breakout. For instance, in this example, we identified a support level and a resistance level, indicating a rectangle pattern. When a candle closes slightly above the upper boundary, traders might assume the price will continue upward, thinking the breakout confirms an uptrend. However, this assumption is flawed. A breakout doesn't guarantee a new trend, and it could turn out to be a false breakout. A false breakout happens when the price briefly moves above a key level only to fall back down. If you had entered a buy position here, you would have incurred a loss. So how can we avoid these false breakouts? One effective method I use is to watch for momentum candles at the breakout point. Momentum candles can be characterized by a large single candle or several medium-sized candles. After a momentum candle forms, three scenarios could unfold. The price continues to trend upwards. The price retraces to the key level before moving up again. The price reverses downwards, indicating a false breakout. So, how should we proceed? Should we wait for a pullback or enter immediately? Personally, rather than trying to predict the next move, I position myself to have an advantage regardless of the outcome. I enter a buy position at the close of the momentum candle and set my stop loss slightly below the key level. This approach benefits me in all scenarios. If the price continues upward, scenario 1, I make a profit. If the price pulls back before continuing upward, scenario 2, my stop loss isn't hit and I still profit. If it's a false breakout, scenario 3, my stop loss is triggered, minimizing my loss. After entering a buy position and setting your stop loss, the next crucial step is determining your profit target. First, keep in mind that during a breakout, prices often have significant upward potential. Using a fixed profit target, such as 1.5 times your stop loss, can limit this potential. I make here now another example to show you how I go in a breakout trade when a big momentum candle make a breakout. First, this is now an example for a small breakout, but with a continuation of the new trend. You can see small but strong candles continue a new trend after this trend break. And this is now a breakout trade with a big momentum candle. A common method is also to put on the breakout points automatic order. This means, when the price drops in this direction, it automatically make a trade. It's working for buy and sell orders. Let's break it down. When prices consolidate, it indicates a balance between buyers and sellers. However, when a breakout occurs, such as a move downward, it shows that sellers have gained the upper hand. Buyers who previously entered at the support level are now forced to close their positions, often using stop losses near the key level. As these stop losses are triggered and sellers continue to exert pressure, the downward momentum increases. Moreover, breakout traders, recognizing this shift, also enter the market, driving prices further down. These combined actions lead to a significant price movement, creating a breakout pattern. Every trading strategy is grounded in the psychology of market participants. Now we show you how to combine the breakout strategy with the moving average indicator. If you want to see how only the moving average works, you can visit our moving average strategy video on our channel. Setting up the strategy. Here's how to use the breakout strategy with MA effectively. Chart setup. Start by opening a chart of your preferred time frame. Apply a simple moving average, SMA, or exponential moving average, EMA, to the chart. The choice between SMA and EMA depends on your preference and trading style. Identifying breakout candidates. Look for a period of consolidation where the price is moving within a range. This is characterized by the price bouncing between a support and resistance level. Breakout confirmation. Wait for the price to break decisively above, for a bullish breakout, or below, for a bearish breakout, the MA line. This breakout signifies potential strength in the trend direction. Volume confirmation. Optionally, consider volume confirmation. A breakout accompanied by high volume suggests strong market participation and increases the validity of the breakout signal. Example trade. Let's walk through an example to illustrate. On this chart, show chart, we observe the price consolidating between support and resistance levels. The 50-day SMA is plotted on the chart as our moving average indicator. When the price breaks above the SMA with strong volume, it signals a bullish breakout entry point. Executing the trade. Once you identify a breakout, enter a long position if the price breaks above the MA. Indicating a bullish trend continuation. Place a stop-loss order below the breakout level to manage risk. Set profit targets based on your risk-reward ratio, or use a trailing stop to capture potential further gains. Managing the trade. Monitor the trade closely as it progresses. Consider adjusting your stop-loss and profit targets as the price continues in the breakout direction. Conclusion. In conclusion, Combining the breakout strategy with moving averages can provide clear entry and exit signals based on price trends. Thanks for watching. I hope you found this breakout trading strategy helpful. If you did, please give this video a thumbs up and share it with others who might benefit. Don't forget to subscribe to the channel and hit the notification bell so you never miss an update. If you have any questions or suggestions for future videos, leave a comment below. I'd love to hear from you. For more tips and strategies, be sure to check out my other videos. Happy trading and see you in the next one.